I've never woken up in the morning thinking I want to be average today.
Right.
And when you're buying a passive investment, that's your saying is I want to do nothing and be average. Give us our money, we'll figure something out.
Right.
That sounds great. How much can I give you, right?
Yeah.
And I'm watching this unfold and going, this is batshit crazy.
Today's guest is the Chief Investment Officer of a bank in Latvia called BluOr Bank. And his name is Pauls Miklašēvičs.
When you look at losses, you should never be in a position where if something that you have goes down, that it ruins your life.
And in this episode, Pauls is gonna share how are they being able to generate the best returns in Europe as a bank. He will also share what are the biggest losses and what are the biggest wins in investment.
So in crypto, you have to be very, very careful of these quasi kind of like religious opportunities where you just believe. And then when you realize that the guys that have been selling this to you have left out the back door and you're toast.
And also we will ask him to invest 100,000 and how he would invest it in many different options and what is his philosophy investing and many practical tips for everyday people plus entrepreneurs that you can apply and get better results with your investing.
And why investing in Bitcoin is stupid and shitty.
Good day, Paul. How are you doing today?
Excellent, Nick. Good to be here.
Let's go. What is the company you represent? What's the company?
I'm the Chief Investment Officer at BluOr Bank in Riga, Latvia.
How big is the bank?
We're a big bank. Our actives are over $1 billion. We're the fifth biggest bank in Latvia.
Okay.
And
Fifth biggest?
Fifth biggest, yeah, behind 2 Swedish banks and 2 U.S. private equity banks.
By number of customers or by assets or by what measure?
By assets, I think lending as well.
Okay.
But that's the bank.
Yeah.
In terms of private client management, which is what I'm in charge of, we're the biggest private client manager in Latvia. We're bigger than Swedbank, Sebbank, Citadel, Luminor. We're number 1 for private clients.
How do you measure that? By the asset?
By the assets we manage, yeah.
How many customers is that? Like how many wealthy people?
It's high net worth individuals. We have about 300 customers right now,
300.
And it's growing quickly. We're up. We started this year at 130 million assets under management, and we're close to 170 right now, and we're just 6 weeks into the year.
How wealthy should I be to go to you, to give you money, to make me more money?
Our minimum investment is 100,000, but our average client has about 600,000 with us.
If I had crypto and I wanted to become an investor, so I have like let's say $200,000 worth of Bitcoin, would you take this or not?
I would not take your Bitcoin.
Oh, come on.
Why not? Why not?
God damn it. Let's stop here.
I'd rather focus on what I'm good at, which is managing money and buying stocks, than going through the regulatory requirements of onboarding crypto. That's somebody else's business. That's not mine.
Is it because of legal kind of constraints and problems and conflicts?
There's all kinds of things. It's something that I realize that I don't need to be involved in, and that's that. That's for the AML guys.
Yeah, and your job is to manage the investment portfolio of the bank, right?
I manage our clients' money.
Yes, right.
And some of our clients are also our shareholders.
Yeah.
What you would say to the people who say basically, hey guys, don't go to wealth management firms because they're going to take fees and a lot of percentages. Just do indexes. What do you say to those people?
I say you have to go to the right wealth managers. And there's been a problem in Europe that a lot of the managers that pretend to be active aren't actually active. They're just closet passive investors with another layer of fees on top. So it's not a surprise that passive investing strategies beat most banks in Europe. But we have the best returns of any bank in Europe over the past 10 years. We've fourfold beat UBS, for example. So we do beat indices, and that's after that, and that's net of fees. That's after performance fees. That's after management fees.
Can you just for a bit of a context, right? We're jumping right into kind of the depth.
Let's
for
go.
An average viewer and follower of our podcast, how would you think about asset management and investment management from like a beginner investor standpoint? Let's say somebody that started making some money, like Nick's asked the question of what's the minimum that you would require in terms of investment in the bank. How would you explain to an average person that is not familiar with the terms that we're talking about here, how to assess, let's say if I want to invest, I have a question of 100,000, 10,000 or 1 million. How would you, in this diverse set of like different investment opportunities, there's tons of media about crypto, private banking investment opportunities, passive indices, and so on and so forth. How would you structure it and answer a question of, if I have 100,000, 10,000, and 1 million to invest, how would you suggest to think about it for a random person?
Matis, that's a fantastic question, and that's why one of the reasons why we've been so successful at what we do is that we don't offer asset management as a product. Like, banks have 37 products, like leasing, mortgages, and investments, right? And you get just a package, and they give it to you. Maybe it does something, maybe not. If it goes up, then it's because they're great. If it goes down, it's because markets are to blame. And it's very hands-off. And so what we try to do is we try to analyze each client's situation, where they are at what point in life, with what wealth, with what ambitions, or with what liquidity needs going forward. And we try to put together the optimal package for returns, liquidity, and also safety. If you're starting out, the first thing I would recommend is that you learn history. You learn how successful businesses have been built. You learn about the societal factors that have created the environment for innovation, what has come along with that. I would also recommend that you learn what a business is. What are businesses trying to do? How do you make money? Right. And I would say that public markets, which is where we specialize in buying publicly traded stocks, in publicly traded stocks, it's an amazing place to start, because you have existing information, you have historical data, and you can look at companies that might be companies and for example, some people in North America, when they were kids, they'd get a stock certificate for Disney, and that was their way that their uncle that was in asset management would get them on the train, so to speak, in terms of investing. And I read, I was listening to a podcast one time. Some guy for his bar mitzvah got a tobacco stock, and so I don't know why they're giving 13-year-olds tobacco stocks, but it was the best performing stock in the portfolio that he was gifted for his bar mitzvah. So I would recommend that you understand what businesses are, how they make money, how they have in the past, how they can do that going forward, and that's why I think that passive investing is so dangerous, because what you're doing is you're basically buying a market. What does that mean? And personally, I've never woken up in the morning thinking I want to be average today. Right. And when you're buying a passive investment, that's what you're saying is I want to do nothing and be average. And there is the ability to find quality companies in the stock market, not just buy the market and make a lot of money. And I've done that personally, and we do that for our clients.
But imagine like a regular person, like let's say I run a company of Shopify, Matis runs his companies. We could never beat somebody like you who's just doing that. It's like, I think it's impossible. It's like trying to beat Alex Ovechkin by going to Saturdays, play some hockey. Yeah. What do you think about that?
Yeah, I think that the advancement of the modern world is based on specialization. It's based on you guys being amazing at what you do, and me gearing down for 25 years, reading 10 hours a day to investigate markets, geopolitical trends, investor psychology, idiosyncratic business opportunities, cycles. All these things come together and enable us to be successful. If you come just from the side, and you can be lucky. You can buy a stock, it can go up, you can forget about it, it goes up, and fantastic. But in order to build a system that's repeatable, or that at least could seem to be repeatable, you have to have that innate confidence that comes from learning. And so to start, that's why I said the most important thing is to start to learn, is to start to see what this is, what is a company, what am I investing in, what am I buying? Because, for example, for stocks, you don't buy the company right now. You're buying for what's going to happen in the future. Yeah. So it's important too for us as asset managers to look at not what's happening right now, but what we see 18 months out, and position for that before other people notice it. And then once they do, we either allow them to join us, or we've already started looking for the next opportunity.
We have an activity planned. So let's imagine this is one chip is 5,000 euros. So let's say we worked at, 5-10 years in our small business, and we have 100K to invest.
Okay. You know that gambling is illegal, if you don't have a license. Especially made public on YouTube.
I hope we're not going to get banned. Yeah. So, and we have opportunities to invest in crypto, cash, gold, or maybe silver.
Those are two very different things.
Yeah, right. Cash or gold.
Two very different things.
Let's say it's gold. Let's say gold. Yeah, okay. I didn't prepare these notes. But
cash, gold. That's an interesting name.
We are Latvians, and you are. So we have Latvian
Yeah.
I think Latvian Nasdaq or what it's called. And we have some real estate, okay? So how would you split this 100,000?
And this is for the next 10
And why?
years.
How and why?
See, this is why I'm necessary for my clients, because I wouldn't put money in
Any of them?
any of them.
Ah, really?
I would absolutely not put money in crypto.
Okay, let's put
Absolutely
that
not.
down.
But
No
why?
crypto.
Can you give a
Yeah,
little
why
bit of
not
a breakdown?
crypto?
Why?
Do you want me to talk about this right now?
Yeah.
Just a little bit.
So there's been a lot of flat out Bitcoin from inception to the past couple of years was flat out the best trade of all time.
Yeah.
Best trade of all time.
If you bought early.
If you bought early,
Okay.
right?
And
So
held.
that being said, so praise be to you that bought crypto when it was trading at $1, and I'm sorry for the guy that bought that pizza that cost him half a billion or whatever, right? But it was the best trade of all time. All things come to an end. Every single narrative I've seen with Bitcoin has failed to actualize itself, right? It's supposed to be digital gold. Well, gold's skyrocketing, Bitcoin's falling. So cross that out, right? It's supposed to be a store of value. Well, from 120 to 60, sorry, not a store of value. Financial innovation. What are you building on Bitcoin? I haven't seen any business case that's actually kind of taken the world by storm. So a lot of the narratives I think have just not held up and have failed, and a lot of people are just basically like holding on a prayer and look at technical indicators. And sorry, you can't just buy on technicals. Technicals can be a signal, but it can't be the foundation of why you're buying something.
When you say technical, what do you mean?
Technical trading patterns, because especially at first when I was looking at crypto and somebody would show me a chart and say, well, it's going up, so you have to buy, right? Or, oh, it went down, so you have to buy, right? So if your argument is, if this happens or that happens, in both cases it's buy, then you're not really thinking rationally. And we had some clients that had made a lot of money in crypto, and I advised them, I was like, look, like you can fulfill all of your dreams right now if you were to sell this, and you're still involved in the industry. Like this guy was a programmer, and you still have the opportunity that if this goes, you'll still make a lot of money going forward. But right now, you can fulfill all your dreams. And I said, imagine if you're in a church and the priest at the front of the church decides that he wants to leave the church and kind of leaves out the back door. If you're sitting in that church and everybody realizes the priest is gone and they're all trying to leave the church at the same time, it's going to be a problem. It's going to be a total shit show, right? Like it's going to be ugly, right? So in crypto, you have to be very, very careful of these quasi kind of like religious opportunities where you just believe, and then when you realize that the guys that have been selling this to you have left out the back door, and you're toast. You're toast. You're totally torched. And especially the more you put into it, if you're blindly just putting all your assets into it, and this happens. Like, sorry, that's tragic, but it's your own fault. So our part of what we do is not relying on this sort of hope and expectation that something will come to pass. We try to spot opportunities and allocate appropriately. So crypto, absolutely not. Cash, gold.
Let's say gold. Gold, silver. Let's say gold. Silver.
Yeah.
Let's make a little bit of a correction here.
Yeah, so we've made a lot of money on gold mining companies because
gold mining
companies.
Okay.
So for the past 2 years, our growth strategy has made 40% net of fees in 2024 and 2025 as well, and up 12% started this year. And a lot of that's been thanks to gold miners. Why gold miners? Because they can produce an ounce of gold for $1,600 and sell it for $5,000 right now. That's a hell of a business.
What's the number? How
it costs them on average around $1,600 or $1,700 to dig an ounce of gold and process it, and they can sell it for $5,000.
No,
that's a fantastic business. Yeah. So if you like gold, so for us, every time we look at a situation where we think there's something interesting going on, we try to find the way to go in with the least risk and the highest potential upside return. We want to catch that upside convexity. And with gold miners, it was a space that was totally underowned. The guys that loved it the most had given up, sold everything. And it wasn't an indices. So you asked about passive investing, and we'll get the S&P 500 next. In passive investing, there's only one gold mining company in the S&P 500 index, and it's called Newmont Mining.
Right.
And 2 years ago, it was 0.09% of the index.
Oh, it's nothing. No.
Zero, like round down to zero, right? Now it's 0.3%. Still nothing.
So you wouldn't get any exposure if you would invest.
If
in
you're a
S&P
passive
500.
investor, you have no exposure to gold miners. Well, guess what? It's been the best performing sector the past 2 years. And if you're a passive
Can I
investor, you've got
just ask
nothing
an
of it.
additional question on the gold? So what was the trigger for you to decide to have exposure to gold 2 years ago, as I understand, when you made that bet, that investment, or you made it earlier?
Yeah, so we started paying attention when Putin invaded Ukraine,
Right.
and Russian assets abroad, financial assets abroad, were seized. And we started a move that central banks started on the margin to buy more gold and less U.S. treasuries.
Yeah.
And the rationale being that if they froze Putin's assets, then if we did something that the U.S. might not like, they could freeze ours as well.
Mm-hmm.
And this kicked off this gold buying cycle for central banks, which has continued since then.
Okay.
So that was our signal. And we thought that if there's going to be these large natural buyers of gold, and the gold mining companies have been absolutely destroyed in terms of valuations and concentration in investor portfolios, then that's an amazing setup.
Yeah.
And as this thesis fulfilled itself, we just bought more and more.
Okay. Next one. S&P 500.
S&P 500, yeah. So I'm gonna link this to the comment on gold. Microsoft, which is about 7% of the S&P 500 right now, if I'm not mistaken, Microsoft itself is worth 6 times more than the entire gold mining industry on Earth. Just Microsoft, right? So if you look at the S&P 500, 40% is tech companies that trade at very high valuations. Yeah. And so if you're a pension fund manager, if you're a huge investor that runs hundreds of billions, we're not there yet, but we'll get there. If you run hundreds of billions and you're sitting on a 7% holding or 6% holding of Microsoft, and you decide, all right, I'm gonna cut 1% of Microsoft and I'm gonna buy some gold miners, all right? Trims a little bit off Microsoft, but that doubles the value, or at least doubles the value of gold mining companies, right? So how we position ourselves is we go there where people haven't gone yet. When we're there, we can buy assets on the cheap, but there needs to be a catalyst. In this case, it was the price of gold and central bank buying. And there needs to be money that can flow into that trade. And it needs to make sense for them to do that. So in this sense, we parked ourselves in gold miners, waiting for money to inevitably come out of U.S. tech stocks. And that's been a hell of a trade.
And has that happened?
It's starting to happen,
Okay.
yeah.
Interesting. Nice. Clear. Latvian stocks.
Latvian stocks. So a lot of our clients are Latvian, which means that the majority of their assets are based in Latvia. The typical playbook for a successful Latvian businessman was build your business, you make some money, you buy some real estate, you buy some more real estate. Yeah. You maybe buy another business in Latvia. So, or maybe then you buy a place in Spain. So you've got a lot of your assets concentrated in illiquid vehicles in Latvia. So for us, my best way of managing risk, because we invest in a small number of baskets, but we watch them very carefully, we need to know that we can get out. Mm-hmm. That's a very important part of risk management. So if in Latvian stocks, they're just not liquid enough for me to be convinced that I can get out. Also, for the local market, we manage a lot of money. And if we started buying a stock, we could drive it up like crazy, right? And then if we want to sell it, good luck.
Same thing, yeah. There's
no natural buyer. So that pertains to a lot of like publicly traded Latvian assets. One of our best performing stocks, though, we own one Latvian stock, and it's been the best stock in the Baltics. It's Kalva Coffee.
Kalva Coffee?
Yeah.
Oh, we know them. They also have came to our show.
They're public, right?
They're publicly traded.
Yes, right.
Fantastic guys, fantastic product, fantastic concept. And Kalva was actually one of the companies when I was walking down the street one day and I saw they were opening up a new location. And I thought, if these guys are ever a publicly traded company, I'd love to buy them.
Right.
And then they decided to IPO, and I had that opportunity.
That happened, right.
And I didn't let it pass. So we've made outstanding money on Kalva Coffee.
Amazing. Okay. Perfect. And the last one?
Real estate. Real estate, it's tricky. It's I'm not a real estate specialist. Everything I've done in real estate has been for my personal quality of life, not necessarily to flip it. So in real estate, you want to be looking at money coming into markets. You want to be looking at the availability of money in terms of where interest rates are or are expected to be. But for a lot of people, real estate is a very good forced savings mechanism, because if you take a mortgage, you're paying down that mortgage every month. But on the other hand, if you're just investing that money with a good wealth manager, I could probably do a lot better than what the historical returns of real estate have been.
I like how you said it. You said it like forced savings account, basically.
Yeah,
Just
yeah,
paying more.
yeah.
That's interesting.
But with real estate, you have to look at what your opportunity cost is, right? So once you factor in all the costs of actually owning something, are you better off just renting it or owning it and then paying for repairs? So it depends on the situation.
Next, can we switch
But
gears?
let's do put the money. Where you put the money
Right.
and how you put it. Everything in here, or what's the
For the next year, well, a lot of things can happen in the next 10 years.
But let's
right?
imagine that's
And
your 100 G's. We just gave you 100 G's.
And
How
you have
do
no
it?
other options.
I have no other options. So
One chip is 5K.
That's it.
All here.
Gold.
But this
Let's
is not
keep
gold.
writing.
This is gold mining company, or this is just buying gold?
no, gold's fine
Same.
too. It's fine. But 10 years is a long time, and that's why we don't.
Interesting.
What our clients value about what we do is they know that regardless of what they're doing, they don't have to be watching markets all the time.
Yeah.
Because if something were to change and I have to move that stack, we're moving that stack. So for 10 years, no. Given this setup right here that I see right now, that's how I want to be positioned. I want to do that aggressively because I see risks here with higher rates. Latvian stocks too liquid, I can't get out. Also geopolitical concerns. S&P 500 overweight in tech stocks. I don't want to be there. And what was this one? Crypto. Forget about it. Right. So right now, if I'm getting these options, then I look them clearly in the eye in terms of what the risks are and the opportunities, and this is where I want to be. So I'm not dividing. I'm not dividing up because I see there's more downside convexity in all of these than there is in gold.
Cool. That was fun. That was
Nice.
fun. I like that.
Can you give me a little bit of a info on where an average person that wants to just know more about investing, what sources of information, like books or some other maybe news or media, would you suggest to look at?
Yeah, there are a lot of podcasts. It depends on what level you're at. If you're a beginner, I'd recommend starting with books and just understanding theoretically like what you're looking at in terms of investments, right? Like
Are there any kind of best books that you can suggest, or it depends on a person what they want to focus on?
It's cliche, but anything with Buffett probably is a good place to start because he actually looks at the fundamentals of businesses. That being said, Buffett's always made most of his money doing the opposite of what he says. But it's
Okay.
But that's the thing is, in order to like think of music, right? Like in order to play jazz, you have to know how to play classical music, right? Like you need to know how things work in order to kind of like go off beat and start to do your own thing, right? So. I would start with Buffett in terms of just understanding what valuations are, what makes sense in terms of multiples, why people pay what they pay for certain companies. There's an excellent book called A Splendid Exchange, which is about the development of by William Bernstein.
Splendid Exchange?
A Splendid Exchange, which is about the history of capitalism and how the West developed, and you can see how a lot of things repeat in history, and that helps you kind of avoid big mistakes.
Cool.
Right? A couple years ago, like in 2001, before they started raising rates and there was like SPACs and people investing in all kinds of crazy stuff, the proposition to clients was, give us our money, we'll figure something out.
Right.
That sounds great. How much can I give you, right?
Yeah.
And I'm watching this unfold and going, this is batshit crazy. And I was reading a book at the time on the South Sea bubble, which was 300 years previous. And this is in the South Sea bubble is where one of the smartest guys in the history of the world, Isaac Newton, got torched. Like,
really?
He bought this company. The South Sea Company was supposed to have a monopoly on trade between England and South America. And this was the opportunity of a lifetime. The stock just went up and up and up. Newton took profits, watched it keep on going up, thought, all my friends are getting rich. I'm sitting here doing nothing. Bought back in, and then it crashed.
Wow.
But in the meantime, there's this mania of trading stocks in London. It was absolute bedlam, and what happened too is they started on the back of this of people just wanting to find like the next thing. Like okay, what's next? What's next? They started issuing these companies where just the offer was, give us your money and we'll figure something out.
Right.
And everybody said, that sounds great. And I was like, this happened 300 years ago. This is happening now. How did that end? Oh, not well. So I don't want to be there, right? So a lot of the mistakes you can make is the ways you can help yourself is don't make blatant mistakes. Don't get caught up in what everybody else is doing. And if you see opportunities, try to spot them early and be patient because it does take patience. You're not going to hit everything right before liftoff. But if you're there, you don't have to chase. And that's the best way to enter a trade.
Okay.
I'm just thinking about I have like a couple of tens of thousands in the Revolut bots, like, they auto trade or something. Dude. I actually don't even know what the heck they do.
You gotta check now.
I'm gonna check
You
that
can
out.
do this
Sounds like a
together
good
with
strategy,
Pauls.
Nick.
Fantastic. Can you explain how does the actual everyday life at the office look like for you? Do you spend most time, I don't know, talking to other investors, traders, reading materials? How does it look like?
Yes, so we're in Riga. So there's not a lot of
big investment community.
investment companies coming to pitch us to buy their funds and so forth, and that's great because I can go 3-4 times a year to conferences. I can meet 20 managers, and that's it. And then throughout the rest of the year, do work on whether we're interested in that fund or not. So we're not bombarded in terms of people pitching us, which is great. And then it's my days are mostly reading, interspersed with client meetings.
So it's a lot of analytical work. It's a lot of reading
Constant,
and looking at data and details.
So it's generating new ideas, but also making sure that your existing theses are intact. That nothing's changed. It's still going according to plan, and just absorbing just the unbelievable amount of information
in
the world
yes.
on a daily basis.
So me and Matis had this guest who's spending on Meta and Google ads like 60 million per year.
Which one?
This Christoph's.
Okay. Yeah.
And he was saying that they have a person that checks their results in these campaigns where they spend like hundreds of thousands a day every 10 minutes. Like every 10 minutes, they're checking.
Yeah.
And I'm just curious about you for asset management. How often is somebody checking, like alerting, like going off? Oh, this dropped 1 percentage point. We need to. How's that looking?
Yeah, so our clients can see the results once a day.
Okay, they can see it once a day. Okay.
Yeah, we don't have live time for them, but they know if they know what stocks they have, they can put it on a stock monitor and see what's happening every day. But there's a saying that if you have to check a stock like every couple of minutes, it means you have too big a position, right? Like you're too much invested in it emotionally, and it's probably not appropriate. So either you should be giving that to somebody else to do, or you should size appropriately. You should take the size down so it's not worrying you. But there is, it's fun, right? Like it's fun to buy something that goes up. And
I guess it's not fun when it goes down.
And it's not when it goes down, but so you have to be able to manage that because otherwise you're not going to be successful, right? If you can't be disciplined in your approach, and part of being disciplined is not looking at it every 2 minutes, right? So you should be disciplined in terms of the way that you analyze the company, that you analyze what you're investing in. It's important you have criteria that you set for yourself, and it's also important that you have criteria that you separate your public life or your private life from your publicly traded portfolio, right? It happens to everybody. I've been there. When I met my current wife, I had a position on that was massive. It was massive, and I made a lot of money on it. But the fluctuations were
brutal.
Were brutal, and I'm here. I've met this fantastic woman, and we're getting a relationship going. And I shouldn't be looking at my telephone, and I realized that. And I closed the position, and yeah, that was the right thing to do because it was taking up too much of my mind. Plus, I also have other people's money to manage. It's not just about my own portfolio. So when I recognized that was an important point for me to say that this is too much. I was taking a lot of risk. I was confident in the result, and it did work, but it takes a toll emotionally on you.
How do you assess whether it's more important to have this emotional intelligence, I don't know, but this discipline versus the analytical skills and abilities? Because you can have people that have brilliant insights, they can see trends and make a bet, but then they emotionally are going to be either too invested or incapable of being disciplined, and then they're going to exit the wrong time or enter the wrong time or going to worry too much or some other emotional issues. Because I understand that when investing, you have to be very disciplined, and that emotionally is extremely hard. I couldn't, for example, do that on a day-to-day basis. Do you feel that that's a big part of being a successful investor, is to have that right emotional setup?
Yeah, you have to be. And investing it's not, I'm going to add a third element. Investing is an art and a science, and which involves emotion, right? Mm-hmm. And that's what makes it fascinating, but it makes it challenging as well. Because if you look at great artists, there are some artists that were phenomenal, but something happened and emotionally just it didn't click, and they made a couple of masterpieces and they faded away. But it's the ones we remember that were able to harness this magic, this artistic ability, but have the discipline to persevere, right? So and that's why we know who Picasso is, right? And maybe he had a cousin that was just as talented, but nobody knows who he is, right? So it requires not only the ability to understand the technical aspects, but if you're talking about technical aspects, you're talking about numbers, right? Everybody can see numbers. Now ChatGPT can analyze numbers, right? Sure. So if you were only relying on numbers and seeing what everybody else sees at that given moment, then you never had a chance.
Right.
It was never about that.
Yeah.
Right? But it's what those numbers can do going forward that is part of the art that creates that magic. And then it's the discipline to understand when you're right, when you should really be excited, and when you could possibly be wrong, and you should back it off a little bit.
Are there some habits or something that you do for the emotional side to make sure that you can do the right calls, not from the analytical, kind of the logical point of view, but emotionally? Like, I don't know.
The emotional preparation comes from having done the work, right? So you have to be confident in terms of why you've made the choices you've made. You have to know what the initial setup was that was interesting to you, what the initial thesis was, but you have to also know that if you're off track, then you understand that something's wrong, and you have to acknowledge that and move on. And part of the thing that helps me in terms of emotions when trading or thinking whether I should be still in a position or not is that I've been very successful doing this.
Right.
And I can take a hit, I can admit a loss because I know that I'll always find another win. But if you hold on dearly to a position that's losing and you get more and more invested in emotionally, it sucks your mental energy. Like we only each have so much mental energy, right? And if you're channeling that to something negative that's getting you down, that's making you doubt yourself, that's a downward spiral. If you say, I don't need this isn't giving me anything good in my life, so what? It didn't work out. I'm going to change my energy to finding something new, something more exciting with an even bigger opportunity, then that's a much better way to go about things. And that's and it's not easy to do, but I've learned that over the course of my career. That focus on the next win.
Okay.
Like, and I think that if you're a successful athlete, you have to think the same way. Like you're gonna have games where it doesn't work out. And one of my favorite sayings is Michael Jordan said, "I never lost a game. I just ran out of time." Right?
Wow. Okay. That's a good one.
Yeah.
And so my advantage over Michael Jordan is that my game doesn't end. Like the trading session ends, but I'm playing this for the long term, right? So I don't have to win over the course of 48 minutes. I keep going.
I think what is kind of interesting in this investment space is that I guess the general society or public sees influencers who are doing, this mumbo jumbo where they're like teaching courses on investing.
They're really just making money on selling the courses.
It's also showing that they're doing investment. I don't know if it's true or not, but they're like kind of showing. I don't think they're lying. Maybe they are legit.
Yeah.
But you have like an actual, like a bank, money, like real assets, doing real stuff, and you don't probably make videos on YouTube showing your accounts and doing that stuff. So what do you as a professional like think about these people who are doing that?
The influencers. Huh?
Yeah.
Hey, God bless. But so for me, it's the very foundation of what I do is that my clients trust me.
Okay.
Right? Because what am I doing? Like basically, I'm looking you in the eye and I'm saying, give me your €1 million and I will make more money for you. And I've said something or communicated something to you or showed you something that makes you nod your head, sign a document, maybe read through the 12-page contract and say, okay, here you go, Paul. Yeah. Right? Now, I take that trust. That trust is something very sacred to me. So we don't talk about our clients. If our clients talk about us, then we're happy about it. But we don't go out. If I could have so much fun talking about my clients here, right?
Yeah,
Say like, this guy, that guy.
Yeah.
It would be great, right? It would be the best marketing ever. But at the very core of what we do is this respect for our clients' confidentiality in terms of not talking about their situation. And so for us, it's interesting. Yes, we want to talk about our services and what we do, but the best recommendation is word of mouth. And if you can amplify that in social media, that's even more powerful. Yeah. But that's where restraint is very important for us, so that we keep that sacred bond with our clients.
What do you think about those people who are doing that? Because for me, to trust Pauls or to trust a guy on the internet who's like every day making videos showing me, I am trusting him more than you, because it's like he's like showing it, kind of like feels legit,
Well, Nick, we just met, so just give me a little bit, right?
but what do you think about those people who are like doing the teaching plus doing the job themselves? Like, what do you think? Is it possible even, or is it like the job will be shitty in general?
So a lot of the teaching, there's two types of teaching. This is off the top of my head. I don't spend a lot of time thinking about this. There's two types of teaching, right? One is that you should be investing, right? And so usually that's steering people towards passively invested portfolios. You focus on lowering costs, getting people into the game, so to speak, right? Investing in markets, and that's fine. Like that's more of a net positive for people than a negative. As long as it gets them going, that's fine. I don't see any problem with that. The other side is some sort of like trading advice where
what this one?
That's nonsense, right? Like it's I see very little value added there because the most dangerous thing that can happen is confirmation bias, right? The most dangerous thing isn't that you try it doesn't work and you say, okay, well, whatever, and lost 300 euros, right? The worst thing is that you're doing this, you don't really know why it's working. You don't understand like the concept of where you're putting your money. And it's right. And then you start putting in more money, right? And then at one point your luck runs out and now you're wiped out and you still really don't know what happened, right? But there's nobody there that takes responsibility for that. So for us, like it's very important that any decision we make, we're able to explain our rationale to our clients, knowing that not everything works, right? But at least we went into something, it seemed like a good idea because of this and that. What changed? That, right? Thankfully, it's a small part of our portfolio. So on the whole, you're not really that hurt, right? And then in the converse, if something goes very well, we also explain, this is what we were expecting. And no, we're not surprised that we made 400% on that because that was part of kind of the realm of possibility that we saw in our probability matrix.
Interesting. Would you, just a random question, would you consider yourself the best professional in investing when it comes to Latvia and the professionals that manage money for their clients in Latvia? Do you think you're the best?
We have the best results of any bank in Europe over the past 10 years.
Okay. So yes. Okay.
Yes.
Cool. That's good.
Do you have like a sales team? And I'll give like a small intro to this, why I'm asking this. One of the first jobs I took in Riga, because I'm from countryside, I was actually in a company that got shut down because of, I guess, some not good activities.
Okay.
It was fraud or fraud.
Or something like that.
Okay.
So I go in, there's like 200 people working and selling options.
Okay.
200, everybody sells. Like they're calling people, making sure they buy options.
Yeah.
It's like what's his name? This Wolf of Wall Street.
Oh, yeah,
boiler room.
Yeah. And guys making like 20K
in Latvia.
Salary. Yeah,
really?
Salary. Yeah.
Yeah.
Wow. Many guys Russian, everything English, like only English speaking, English and Russian. And that was my first exposure. And I came to job, they teach me, and then they give me like a list to call. And I was out like calling, asking.
Ah man, I didn't know this.
To put money in, and I couldn't sell anybody. And I quit after. But there were guys like making legit money, legit money, like selling people. And then the idea was also, you need to get the customer a small win, small deposit, and then what you said, one deposit after another deposit after another deposit. It's like so interesting, this experience in this investing in world. Basically, that was my first kind of investing world experience.
Yeah, so that's an example of where you can make a lot of money doing this, like pitching somebody quickly, or if you invest the time and you show quality of work, then over the long term you can make a lot more money.
Yeah,
sure. And I think that everybody else turns out happier.
But your bank has a sales team, like people who are actively pursuing customers.
We have amazing private bankers that have connections with clients or cold call in some cases as well. Yeah, and then if they deem that the client needs asset management services, then they set up meetings and we go from there.
Okay. Can I ask you a question about legendary investors? So I don't know, 20 years ago when I started kind of getting into business right after graduating, or even during the university, I read a lot of books about investing. It was like this kind of entertaining, basically, way of spending time about Buffett, Carl Icahn, all these different characters. I'll give you a list of names, and you give me like, I don't know, a couple sentences, bullet points. What do you think about those investors? Let's start with not Buffett, with some maybe in Latvia at least known investors. Bill Ackman. Do you know him?
Bill Ackman, yeah. Here's a guy that's probably more notorious on social media than in terms of actual returns. Okay. So he's had some interesting ideas, but a lot of what he does is to call attention to himself.
Okay.
Yeah.
Interesting. Ray Dalio.
Ray Dalio built Bridgewater, most successful hedge funds of all time. He's now turned into a sage and philosopher and
an influencer.
Influencer pontificating on the state of the world.
But you're having a smirk, like
because I think he was a better money manager than he is a political philosopher. But he's a good writer. But I think it's very important for him to be seen as intelligent in terms of political philosophy. Because he wasn't just content with making a lot of money.
Okay, cool. Peter Lynch.
Peter Lynch, legend. He's excellent. Peter Lynch's books are great. I recommend them, especially if you're starting on investing. Because he emphasizes the right things in terms of growth and allowing money to compound. He's one of the... Because back in the day, these guys were superstars. Like they were on billboards and whatnot. So Peter Lynch is legit.
Amazing. Carl Icahn, my favorite.
Carl Icahn, he's more kind of in the private investments. So he's made incredible investments.
Steven Schwartzman.
Steven Schwartzman behind Blackstone Group. Again, private equity and made incredible moves.
You follow also.
I know a guy actually. There's a Latvian guy in New York in investment banking that said that he used to work with Schwartzman, and he saw like the guy had talent, and he said I should have gone to work with him.
Exactly. Should have.
But he could see back then that Schwartzman had a certain something about him.
Two more. George Soros. He's still alive, yeah? I think he's
George Soros still alive. Yeah, he's fantastic. George Soros has a very clear view of where he wants to be and why. And he's the case of a guy that trades with no emotion. He can basically, if his back hurts, he used to say if his back hurts, he sold everything, right? He'd exit days with zero positions. Other portfolio managers would build positions over time. He'd go in, and if he just feels like getting out, he's out. So no emotion to George Soros. And what's the last one? Buffett. Yeah, Buffett is phenomenal. Buffett is a case in point of doing it for a long time. If you invest for a long time, your returns can be phenomenal. Buffett is an example of somebody that knew what he was doing, and he also understood kind of the overlay in terms of opportunity sets. He realized that one of the biggest problems for investors was getting stopped out. That volatility can trigger stop losses.
Right.
So what he did is he bought American companies in the era of globalization. So companies with phenomenal growth trajectories in the era of globalization, and he did it through an insurance company where his liabilities were in the future, right? So he was getting money up front, and he'd have to return it in 20 years. So basically, a lot of Buffett's performance is attributable to a leveraged play on globalization. And you know what? Hats off. He nailed it. And here's an example of if in investing, if you get a couple concepts right and you set up the trade in the right way where you don't get stopped out, you can stay in the trade, but you can add some more extra leverage to it. You can make a lot of money. And some of the best things in life tend to be very simple, but in investing we tend to try to complicate things and play like relative valuations against each other. But end of the day, you can always make the most money in big ideas, which in hindsight just are simple and genius, right? So we try to use that lens also when we're looking at what we're investing in. Is not this is something interesting, it might work, but what is so simple that if people start to get it, they'll trip over themselves to buy it, or what will seem obvious 15 years from now? That this was the obvious best trade. And how do we have the discipline to stay in that trade? That's important. I'll add another guy to the list, who I think is the best of all time, and that's Stanley Druckenmiller. He worked for Soros. So it was actually Stanley Druckenmiller's idea to... Soros is famous for breaking the British pound. He made $1 billion in a day off the pound. $1 billion now isn't that much money. Back then it was, right?
That's crazy.
So the idea was actually Druckenmiller's. But what Soros said was, I like this idea. Let's take it up 30 times.
Exactly.
Right. So Druckenmiller was thinking in the context of like, this is an elegant idea. Like I think like the odds are on our side. And Soros said, let's
bet the house on it. Yeah.
Go. Right. Let's bet the house. And that's what made him a legend. And that's what Druckenmiller learned from Soros is that if you like something and if you're convinced in your thesis, then you can't be afraid to push the envelope a little bit or even a lot.
Stephen Cohen, is he an investor or is he a trader? or
Yeah, he's a trader. He runs SAC Capital. I guess they changed the name now, Point 72 or something. But yeah, he's probably one of the best traders in terms of managing risk on open positions. He's probably the best that's ever done that.
Have you seen the movie The Big Short?
Yeah.
What happened at that time on the housing market crisis in Europe? What was the difference between how they represented it for America and here in Europe? How was it looking?
Yeah, in Europe, there wasn't as much blatant speculation in the housing market. So yeah, it was the effect on European banks was less than, but a lot of European banks still bought these U.S. Housing loans that defaulted, right?
And what about your bank? How did you do it at that time?
I wasn't at my bank at that time, but I think that because my bank at that time was not in the mortgage lending business, it was the only bank in Latvia throughout the crisis that made money.
Oh, really?
Wow.
Yeah.
Okay, that's crazy. Have you been to Buffett's annual shareholder meeting in good old Omaha?
Nebraska, right?
Or not?
I have not. I have not.
I have been. I have been.
been?
Yeah. Man,
How
I
was
was
it?
a fan. Yeah, it was crazy. I went there. Well, first of all, I bought this B-class share.
Yeah.
One share. I think it cost $300 or something like. I still have it in my Swedbank brokerage. I have this one share,
Nice.
and now it's like I don't know. It's 5 times the value. But so I bought that one share, and I wasn't sure if with that I couldn't find online, or I don't remember. I was not sure if with that share I qualify to go to the meeting, because basically, for those that don't know, every year Berkshire Hathaway, which is Buffett's investment company, they make this annual gathering of all the investors. But in order to go there and to get into the event, you have to be a shareholder, meaning you have to own shares in the company. And the trick is that the A-class shares, the main shares, they cost, I don't know, like hundreds of thousands now, or 100,000,
Yeah.
something like that. Crazy amount. So I couldn't even, maybe I could afford, but I thought that would be a crazy thing. So I bought this B-class share, which costs
there you go.
a couple of hundred. Yeah, that's the event. And it was crazy. It was massive. I mean, I saw Buffett, Charlie Munger was still alive, Bill Gates, all the this famous board and so on. And then I went to some of the legendary. There was this furniture shop, if you remember, that he bought from this lady, and other different places. And then I met a guy who also was a private investor in the US. We had a good dinner, so it was amazing. Yeah, and I couldn't get around anywhere because all the taxis, the whole town was like swamped with people. So
very cool.
It was cool.
That's a cool story.
I've not
right.
been to Omaha, but that speaks to Buffett being able to do his own thing. Like, he's not in New York, he's not in London, he's not in Frankfurt. He's there. He can think clearly, and if he wants something, he can ask for it. But he's there, and he's able to kind of look at the world through his own lens.
Yeah.
Not one that's constantly just like provided to you by some sell side guy.
I'm a lot in the marketing space, and I'm just like, maybe one topic. Why did you change the name for the bank? Maybe you have some information to comment. Why does that happen? I think banks typically like very stable.
From Balticums Bank.
No, they have Blue Orange.
Yeah, BluOr,
and now
yeah.
it's BluOr.
That. No,
Yeah.
I mean, it was Balticums.
Balticums
Bank.
was
Before that.
way back
That
more,
was the
okay.
real change of the name.
Yeah, so this is like, so I guess Balticums was associated with an insurance company that had the same name, so that's why they wanted to kind of get away from that. Blue Orange was changed to BluOr because they didn't have the necessary European trademarks for what they wanted to be doing going forward. So in order to have the full suite of trademarks in Europe, they had to change the name, and then they changed to BluOr Bank.
Interesting, because of trademarks. Okay.
Can I ask, just we maybe should have started with this, but can you give your kind of information on your background? You have an interesting background. You're here in Latvia. You've born in Canada. Why did you move to Latvia? And how would you compare the two countries in terms of the culture and how you feel about having been in Canada and now in Latvia?
Yeah, I was born and raised in Canada to Latvian parents. So I went to Latvian school every Saturday, Latvian church on Sunday, Latvian scouts, Latvian summer camp. So I grew up in Latvian society in Canada. And the Latvian society in Toronto was the largest Latvian society outside of Latvia after the Second World War. So at one point, went to university in Canada and started working on Canada's Wall Street, Bay Street. Had a successful career and went to Latvia for the first time. I had friends that had moved over here, and I loved it. And that was pre-crisis, and it was a bit of Disney World. It was fun. But yeah, I didn't have any personal attachments. I had made a lot of money doing what I was doing. I thought that my skill set would be in demand in order to build asset management in Latvia. And I had a lot of confidence, and I moved over to Latvia. And
Was there something about Canada that you didn't like, or you wanted?
no, it's
change?
quite the opposite. I love Canada, but in my particular job, I felt that I was on this like luxury train where you know the next 6 stations,
Right.
And it's just life's funny. Like one time I met this guy that I kind of looked up to, and he's a mentor of mine, very successful sales guy at a brokerage firm. And he was always this like very charming, energetic, charismatic guy. And one day he was just off, and I realized he was being off because we know each other, and he wasn't trying to kind of
Right.
put on a character. And I asked him like, well, what's up? Like something's off. And he said, like I just finished renovating my house, and I love my house, but my wife is best friends with my partner's wife. And they just bought a new, bigger house.
Oh my god!
And now my wife wants a bigger
the
house.
Usual rat race.
And I thought,
Jesus.
okay.
Yeah.
So in one, my heart's telling me is like, Paul, you're Latvian. You should try living in Latvia. Like, what has been the sacrifice by your family to raise you as a Latvian in Canada? You have any opportunity in the world that you can access. You have to try moving to Latvia. And then what's holding me back is this guy saying that, end of the day, you just want a bigger house.
Yeah.
Your wife's want a bigger house. So that was it for me. I was there. Everything was fine. I had no complaints. Quite the opposite. But if I was just on this train, it was comfortable, and it was foreseeable and
Predictable. Yeah.
And I knew that if I were to build something in Latvia, I'd be far more proud of my life's journey than of just kind of having done well in Canada.
Right. Okay.
And what's your experience working in this charity company called Ronald McDonald?
Yeah, I'm the chairman of the board of
I still are.
of the supervisory board of Ronald McDonald House Charities Latvia, now Ronald McDonald House Latvia. So this goes back to my Canadian upbringing. When I worked on Wall Street in Canada, in Bay Street, there's a big effort to give back. I think people recognize how fortunate they were to be in that business, to be making a lot of money, to be working with people that also wanted to give back to society. And so our company organized this event called Bay Street Rocks for Kids, where guys that played musical instruments or that had rock bands could go on stage in front of their peers. Everybody sponsors it. We raised $25,000, $35,000, and we donate that to charity. So the guys get to live out their childhood dream of being rock stars. Everybody goes to a good party, they have fun, and kids get money. And when I moved to Latvia, I was looking to again be involved in charities, and I was fortunate to meet the founder of Ronald McDonald House Charities in Latvia, Jerry Worth, through the American Chamber of Commerce. And it seemed to me like an amazing organization. It pays for doctors to go from the Children's Hospital in Riga to all corners of Latvia, and they offer free consultations. And what that does, it means that people everywhere in Latvia have equal access to care. So we do over 5,600 free visits that are all funded by corporate sponsors, individual sponsors, and some help from McDonald's as well.
That's very cool. Yeah, just like McDonald's. I also choose McDonald's over Burger King for sure, or Hesburger. If I had to choose, I choose McDonald's.
I'll let them know, Nick.
That's it. Can you just, as a wrap up on the investment side of things, give a very brief summary of your current investment philosophy and convictions of what do you think will make money in the next couple of years, and why?
So governments took on an incredible amount of debt during COVID, and they'll never pay it back. So the only way that they can kind of get out of the situation is devaluing money, right? If you lower the future value of your current liability, that's how they can kind of kick the can down the road. So right now in the current setup, I don't want to get too technical and get into market strategy, but we basically see that it's the interest of governments to keep on spending money, and they've already spent a lot, but they'll be spending more in the future. So that will be the governments that on the margin will be spending more money. That could be interesting to buy their stocks in those countries. But we like physical assets. We like things that are difficult because over the past 10, 15 years, technology stocks have been ascendant, especially US ones. And we're used to living in a world where if you press a button on your phone, you can get a hamburger delivered in half an hour. But we don't really know what it feels like to press a button and get something delivered in 8 years. And that's the situation in a lot of critical material markets and energy markets, where we don't even understand how difficult it is to get the stuff that we need in order to build our industrial economies.
Right.
And right now they're talking about rare earths in the U.S. and China's role in processing it. It goes way beyond rare earths. It has to do with everything. It's been too easy to make money in technology and in other things, and it's hard to build big mines. And with time, and because it's hard and it wasn't very profitable, then why do it?
Yeah.
But so investing in natural resource stocks, it's the worst possible business to be in for periods of 10, 15 years. And then for 5 years, it's the best business in the world. And then there's constant cycles of investors that forget that, or forget the lessons that at one point the party's going to end and get out in time. But there's a whole new host of investors that don't even know that those parties existed.
Yes.
And when I started my career, in Canada when China joined the World Trade Organization and was buying everything you could dig or suck out of the ground to build their industrial economy. And it was a golden age for Canadian stocks because there were specialists in natural resources. We made a lot of money. And most investors that are investing now, they've forgotten that. That's pre-Great Financial Crisis. They don't have any exposure to those types of companies in their portfolios, and they will. It's a matter of time. And as that happens, we'll make a phenomenal amount of money again.
But what are maybe some of the losses you have gotten?
Yeah, that was one of my last questions. Biggest losses.
My biggest losses?
And yeah.
So there's two types of losses. There's losses where you own something and the value goes down and you're sad. Right. And then there's losses of there's something that you had and you sold too early.
Okay.
And it could have changed your life.
Right.
Right. So when you look at losses, you should never be in a position where if something that you have goes down, that it ruins your life. In terms of losses, I had a funny company. I had a company like they literally sold worm shit.
Worm shit?
Worm shit. Like,
like worms.
Worms.
Okay.
Yeah.
The shit from worms.
Yeah.
Turns out it's the best fertilizer on earth. Right? So they had this like specialty fertilizer they were building based on worm shit. And it was going great. And then I guess the worms got sick and they died.
That's a public one.
This is a public company.
Wow.
That was literally a shit show.
Right.
So yeah, that was way back in the day. But the biggest mistake that I made, and it goes back to the story I was telling previously about having positioned that the risk was just too big and it was messing with my mind, was I sold Shopify too early.
Oh, yeah. I was going to ask, how did that stock do after you
sold?
sold?
Shopify at that time, I was like, I had like more than half the open interest on call options on Shopify. It was a Canadian company. Americans weren't paying attention to it. The options were pretty illiquid, but I was very aggressive, and I made a lot of money. And so what happened is part of my narrative with Shopify was that the eventually people would see them as, to use Star Wars as a metaphor, they'd see Shopify as the rebel forces to Amazon's evil empire.
Right.
Yes. And that was an important part of my metaphor or my narrative for Shopify. And I'd made money come out for clients as well, in, out, doubled, pulled back, buy again. And we had sold out at that time, waiting for reentry, and I heard somebody on like Bloomberg News refer to Shopify as like Amazon's the evil empire and Shopify as the rebel forces. And I thought, and the stock was up 16% that day, and I never got the pullback. Wow. And then COVID happened, which wasn't part of my original thesis. Right. But COVID happened and it 10x'd. Yeah. Right. And if you have a leveraged position on something that 10x's, that's a lot of money. Yeah. So. Not to say that would have happened in every single possible scenario, but that's something where I recognize that I pay too much attention to valuations, because I sold Shopify when it was trading at the same price to sales as Microsoft during the dot-com boom, right? Okay. So I said, like, if this was the peak valuation of where Microsoft traded at, and they turned out to be Microsoft, it's not guaranteed that Shopify will be Microsoft. And that was my rationale. That again, I've been doing this for 25 years. You live, you learn, and short-term valuations aren't really the best way to gauge entries and exits, because it's important to understand the narrative, and if the narrative is so powerful, it can do crazy things. So it's best to invest in things with potential where people seriously will trip over themselves to try to buy something, and while they're tripping, just let them keep on tripping.
Interesting. Do you have some maybe like principles how you go about managing expenses, managing your portfolios? Like, what maybe you have something like, or how you do it, or is there something specific you could share, like how you do it?
Managing portfolios,
or maybe expenses, or do you even keep track of expenses, or it's just no need?
Like my personal expenses?
I think so.
Yeah, managing portfolios, it's very important that you let your winners win. That you don't, that you look at big themes, like big opportunities, and you don't try to flip something for plus 30% and then try to find the next opportunity to make 30%. It's better to do your work, buy something, and hold on and make 5, 6, 7, 10x. That's much better. It's better for your peace of mind.
Yeah.
And it trains you to think in a way, in a better way. It trains you to be disciplined in your thinking and looking for the big opportunity, not just the flip, right? Not the hustle, for the career, right?
Yeah.
Like and that frames your thinking differently. You take yourself more seriously. You take your money more seriously. You take your mind more seriously rather than just trying to be opportunistic, right? That's very important. In terms of personal budgets, like be careful. Don't spend more than you make. And I've never really felt the need of trying to like show off. I don't think I'm particularly good at it. So it's not really part of
Good at showing off.
It's like, what's I buy this car?
Yeah.
What am I going to do with it? Right? Like I have to park it. So just stay within your means. It's in investing, it's very important to never be forced to do something. And I think that pertains to life as well. That if you feel like you're forced to do something, you might not necessarily make the best decisions, right? So in investing, if you're over leveraged, you're forced to sell. It's not your choice, but you're forced to do it, but you've put yourself in that position. So to be able to call your own shots, not be forced into things that you realize, most things that you do that don't work out, you kind of know it's not going to work out, but you kind of think that, well, maybe this time is different. Not really, right? So put yourself in positions where you have a much better chance of winning. And if you fail, then you're okay with it, rather than you have a small chance of winning. And if you fail, you kind of knew that to begin with, and it's not a good place to be, right?
Cool. Let's wrap it up. Thank you for coming.
Well, thank you.
It was cool.
It was,
Very
good
cool.
insights. Appreciate
And
it.
I love the worm story. That's so cool.
That we'll put in the front of the conversation.
The worms just died.
Yeah. That
shit
can happen. That can happen.
That's the coolest one.
Nick,
Thank you.
Matis, thank you very much. This was fun.
Appreciate it.
Cool.
Nice.
Cool.
Thank you.
Cool.